Hey guys, it's Kevin at Watchhimtrade.com. Today's date is April 19th, 2015. This will be a video chart on Google. And this is Google Class A shares, by the way, GOOGL. Remember, since the split, there's actually two Google tickers. I trade Class A, so that's the one I'm going to review. Google has earnings this Thursday after hours, and stock hasn't been very strong at all here in 2015. Hasn't been weak necessarily. Really kind of epitomizes what 2015 has been about, and that is a whole lot of chop. Except for Google. Google's chop started in October. You can see just a pattern of a whole lot of nonsense going on here. You look like you're breaking down, then you recover. You look like you're breaking out, then you come down. But the point I want to make is that Google just is in a longer-term consolidation over the last few months. If you take the October low of 519 on up to the bounce up to 568, and if we just put that in a box, you can see that Google, and then we stretched out here, Google has pretty much stayed in that box with a couple of exceptions. In December you had some time spent below it, and then in January you had some time spent below it, and then in March you had some time spent above it, but both times it's continued to then come back into the range from its October shakeout and recovery. So point is, Google, you just really haven't gone anywhere. And that's exemplified again if you just look at the year-to-date action on Google. So you closed last year at $530. So if I just put a trend line at $530, you can see Google, where are we at right now? We're right at $532. So just haven't gone anywhere on a year-to-date basis. And the market hasn't done a whole lot either, but individual tech stocks have. Netflix is up a ton, Apple's up nicely, Amazon's up nicely. Okay, so Google not participating the same way as some of its sisters, if you will. So with that said, what's the outlook on this thing right here, right now? Well, I'm focused in on this 530 level because that is your break-even line, and I think you could see some support versus 530 and maybe bounce back up, try and get back up towards 550. But if you break down at 530 and go red on the year, then that would expose, number one, this open gap. This is an earnings related gap from late January. That price is between 513 and 518. So that would be target number one. And then number two would be these lows. These are 52-week lows down here, and that's the year-to-date low between 500 and 496, I believe. Nope, it was lower than that, 490.91. So just call it 490. So below 513 to 518 is the target if you get below 530, and then below that 13 to 18 mark, 500 to 490 comes into play. These are wide targets, but I'm mentioning these because, again, we do have earnings this week, and Google is going to be volatile. At least that will be the market's expectation, will be for a big-time move. Now, if you hold 530, talked about getting back above 550. You can see that clearly just from the most recent highs that you came off of. They were between 50 and 55. So if you can get above 50, you can start rallying again, and then try and get back into that 570 to 580 range, which has marked the highs for the year so far on Google. I want to show what the market is pricing in for this move. So what you do is you take the at-the-money call and the at-the-money put and add them together. So we're looking at 1150 on the put and about 12 bucks on the call. So Google, overall, the market is looking for a $23 move, give or take, at this moment anyway, going into Thursday. That will be a fluid number. It will change as the stock's price changes. this week. But as of now, the market is looking for a 4.5% move either way on Google, which in its historical terms on earnings is actually probably on the smaller side, but on a daily basis that would be a big time move for Google. So again, 23 points from 532 has taken us either back up above 550 or back down towards 500. So that's why I'm talking about some wider term levels. All right, so 530 year-to-date break even, 550 key resistance, 513 to 518 key support above 500 to 490, which is critical support. Lastly, I know some people, a lot of my members have been talking about how annoying Google has been in that it doesn't have much of a trend, as I've pointed out here, but I want to show you that this is par for the course for Google. She tends to go through these very long consolidations on a yearly basis. I'm going to look at a monthly chart here, and what I want to point out is the action from 2010 to the middle of 2013. You can see Google traded between about $250 and $310 or so for, and that's split adjusted, for nearly 3 years. All right, so she did a long consolidation and just didn't really go anywhere for a long time, and then when she did, she broke out big time. Google's kind of doing the same thing. Since the beginning part of 2014, she's been trading between about 500 and 600, give or take 10 points here or there. So people kind of want Google to keep making directional moves, but you know what? You look at its longer term characteristics, referencing 2010 to 2013, and this is normal for Google to do this consolidation. So don't get frustrated. Understand that this is a normal process for Google, and once we get a breakout either up or out to the downside of this range, history shows us in this move right here that we should expect some really good direction.